Good morning, guys. Happy Thursday, October 11th, and jump right into the focus list. So, of course, guys, last week or so, the market has been very weak, and it looks like that weakness is set to, continue today. Now, we don't have to sit here and talk all morning about the market weakness. It's as simple as this, You see a lot of people panicking right now, a lot of people asking, what's going on, what's going on. A lot of money is just being sold in the leading groups in the market, guys. I mean, look at the technology sector. That's a lot of money leaving that group, The same reason that prices rise when big money is buying, it has the same result when big money sells, the price goes down as well. So one other thing I'm going to say is if we kind of look at a bigger picture, this is a nice correction in what is still a very strong, bull market. Unless this completely collapses, guys, this is really nothing to panic about. A lot of you during your time trading, you've only known kind of, bullish action. You haven't seen a big sell-off yet, but it happens. It's healthy for a market and it's needed. I mean, we had a nice good size sell-off over here and then that brought us to new highs, shortly after. So regardless of what's going on right now, regardless if, you've lost money over the past few days, here's how I think you should look at it. All of this selling, all of this damage, it's going to create some really good opportunities for us when the market does make its bounce back to the upside. Now, here's where you can get screwed and where you can get crushed is trying to catch that bounce, trying to get cute and catch, the exact bottom of these moves. It's not easy, guys. You could have lost your whole account trying to catch the bounce in Netflix over the past few weeks because Netflix has not stopped, and we're going to open down another 2.5% today. For anyone who bought calls yesterday trying to predict the bounce, it's going to be a rough morning. And again, it has nothing to do with Netflix. It has nothing to do with Apple, who's down 1.5%. Facebook is going to open down another 1%. Amazon is going to open down 2%. This is what selling looks like, guys. This is what profit taking looks like. I want you to imagine you're a mutual fund or you're a hedge fund. Say you've owned Amazon for the past 2 years. Look at the beautiful, investment and trade you had for your clients. What you guys got to understand is that, that's all virtual money. That's all virtual profits until they decide to close those positions, until they take those profits off the table. That's what we're seeing right now, and we're kind of seeing it across the board. Financials has gotten sold off. Energy, had a rough day yesterday and set the, open down even lower today. So what we're seeing right now, guys, is not so much, a rotation. Rotation is when, again, our whole market is controlled by the big money. Rotation is when these big guys sell their holdings in, say, the technology sector, and then they move those funds. If I sell $20 billion worth of technology positions, I now have $20 billion plus in my, exposure to put to work for my clients. What you'll see in a rotation environment is money leave one group and then immediately start to head into another group. You'll see technology crash and finance begin to rip, or energy begin to rip. But we're not really seeing that right now. More so what we're seeing, and here's healthcare sector. Nasty day down yesterday. We're just seeing the overall market, guys. And we want to focus on the S&P 500 here. We're just seeing a sell-off. We're just seeing profit taking across the board. This doesn't mean we're going into a full-on bear market. It doesn't mean, it's game over. There's nothing to panic about. My biggest suggestions are relax. There's no need to trade. A lot of you guys like to talk about, wanting that trading freedom, that trader lifestyle freedom, but you're still sitting here during the midst of an ugly market, banging your head off the wall, trying to, catch these little bounces that you're predicting. We as traders, we have to focus on finding low risk, high reward opportunities. In this environment, guys, trying to catch a bounce, that is a high risk, low reward opportunity. That's how, especially with options, you can do some pretty serious damage to your account. So again, my suggestions are, let's just sit back, wait for the dust to settle. And guys, when the market makes a recovery, it's going to be obvious. Again, I can't continue to preach that bird's eye view enough. don't look at just Netflix today, or don't look at just Amazon, Facebook. Don't look at just one stock. Look at the SPY, the Qs, various technology stocks, and when that bounce happens, it's going to happen across the board. It's just going to be clear as day and obvious. We haven't seen that yet, guys. And the other thing I want to mention is that be careful with the options you're choosing. Right now, a lot of the out-of-the-money options are getting destroyed because that premium is getting killed. So, again, don't go for any home runs here. I would drastically cut back on position sizing and just take a break, guys. Go into observation mode. When you're not invested and when you don't have any, skin in the game, it's actually enjoyable to watch, markets like this. I'm not making much money right now, a few $100 here and there, but I'm not taking damage. I'm going to be fresh and ready to go whenever the market does correct itself. And I hope we can say the same for a lot of you guys. If you've gotten battered around, those are my suggestions. Chill out, go into observation mode. If you do trade, very small sizes, and don't go for the home run options. Keep it nice and simple and safe, and wait for the market to correct itself. So I'm not really going to talk about individual stocks this morning because there's not much to talk about. That scenario, the big picture, that strength coming in across the board, that's when we can start to talk about the technology stocks. Now, what I suggest you guys do is look at things like Apple, Facebook, Google, Netflix, Nvidia, Amazon, BABA, Tesla, some of our market leading stocks, and pull up a daily chart today and begin to look for big levels of support. See if we're beginning to trade down to any major levels of support, and kind of get a gauge for potentially levels that you should pay attention to. Now, doesn't mean you should rush into a support bounce, but again, the big picture is super important, and let's be mindful of any crucial levels that these leading stocks are heading to. In terms of stocks that should be in play today, again, don't go rushing into these trades if the market is getting torn apart again. But Delta Airlines beat earnings last night. They raised guidance. We're set to open up almost 3% higher this morning. What I would look for here, guys, if you're looking to trade today, is a potential open level setup on Delta. And again, small size. For me, if I do take this trade, I'm looking to pay the electric bill. I'm not looking to bring in thousands because I'm not comfortable putting that risk on the table in this mess. Got to know when to kind of sit and when to take action. So Delta Airlines, good news out of them this morning. This should be a stock in play. In play meaning it's got a catalyst behind it that should cause some kind of nice price action. So we want to keep our eyes on this. I'll keep my eye on it for the open level setup. And again, guys, that's kind of it. Again, observation mode right now. It's not much fun, but sitting back doing nothing is a lot more fun than getting torn apart. So I can't suggest enough that you guys just take your foot off the gas a little bit, chill out, and just wait for the market to work itself out. You want to be mentally ready, you want to have your capital ready, and you just want to be, ready to execute whenever the market does correct itself. And if you're just getting torn to shreds right now because you just keep trying to press the issue and you keep trying to force trades, you may not be prepared when the market does present us with some opportunities. As silly as it sounds, even if we get a 1 week correction back to the upside, that's enough to double your account if you get aggressive, but you're never going to be in a position to do that if you've been getting your ass kicked. So that's my speech for today, guys. Be patient, observation mode, and let's peep Delta Airlines today and see if we can get any low risk, high reward opportunities there, and I'll see you guys in the chat.